we've got Mohit Gang here to explain and unwrap all that for us. Mohit, good morning. Pleasure having you back here with us on Newsline. Help us understand why are IT stocks rallying so beautifully this morning?
Hi, Kartik. Good morning. Always a pleasure to be on your show. Look, I think, yes, it's a combination of multiple factors, and a couple of those factors I think you have very beautifully highlighted. One is obviously the strong possibility of rate cut on September 17th, which is the next FOMC. And I think the market is completely now pricing in a 25 bips rate cut. So I think that's pretty much on the cards now. And the 10-year yields in US, if you see, have softened to almost like a 4% kind of level, 4.04 if I'm not wrong.
Right.
Right. So I think that always augurs very well for the IT indices or the IT benchmarks. Obviously, there has been a tearing rally in Nasdaq, and I think the amount of investments which these IT companies have been pumping in into the AI has been unfounded. And I think the numbers are staggering. So I think all of that is fueling rally. But domestically, I think it's also the sentiment which has been driven by the buyback announcement or the buyback proposal, which Infosys is kind of coming out with on September 11th, if I'm not wrong. Infosys, if all of us know, is sitting on a huge pile of cash and cash equivalents, almost to the tune of almost 45,000 odd crores. So a buyback proposal will mean roughly 25 to 30 odd percent mop up from the market, which would be around again in the vicinity of somewhere in the 13 to 15,000 odd crore mark. And that kind of gives a very positive signal to the overall sector. Infosys being the bellwether stock, I think it's just gotten lapped up by the street as a very positive news. And it also shows the amount of confidence which the management puts behind the company. So I think overall all these triggers are kind of helping the IT sector to show us a good green mark today morning.
All right. So a lot of factors, of course, the rally driven by the bellwether Infosys. Mohit, I also want to shift focus now, or rather shift gears, if I can do some wordplay, to the auto sector. And the auto sector has seen unprecedented great days the last 2 or 3 trading sessions ever since the GST reforms were announced. But there seems to be some consolidation, some booking of profits that's visible, at least on the charts this morning. How does this story look for you coming festive season, followed by the New Year discounts for, let's say, the next quarter or so? How does India's auto sector look to you?
Oh, I think the wins for the auto sector are mind blowing, Karthik. Honestly, I think the GST booster has been amazing. Anything which is 1200 cc and below, and obviously for two wheelers, I think that's a great bonanza. And given that the festive season just kicks off from 23rd of September, I think. The signals are very very good and looks very promising for the overall sector. Also, I think the consolidation is just about a little bit of profit taking. There has been a good tearing rally in the auto names, and I think market is just about consolidating its position before it makes way for the next move. So I'm pretty bullish on this entire pack, Karthik.
All right. And if we move away from sectoral focus, Mohit, and spend some time on the broad benchmark indices, we are almost a year to when the Sensex and the Nifty saw their lifetime highs on 26th or 27th of September last year. Investors waiting in the wings, hoping for recouping some of those losses that we've seen through the year. But despite a spate of good news, Mohit, and I started the segment by saying that we had excellent Q1 GDP growth numbers, we have the GST reforms, and some sort of a certainty around the uncertain Trump tariffs. Now, at least, the deadline has passed, the tariffs are in place, so there's more certainty. Perhaps not positive certainty, but at least there's some surety of which way that is headed. And many believe it can only get better from here. But for some reason, the benchmark Sensex and Nifty continue to be in that slow momentum, not really inching up as fast as investors would want them to. So what should investors who have patiently been waiting now do? What should their strategy be?
Look, Karthik, I have long believed that markets can keep testing your patience for a pretty long while, right? And all of us cumulatively can go crazy trying to figure out what's the real reason why the markets are not rallying in spite of such positive news flow domestically. Having said which, I think we cannot forget the environment in which we live. I think globally, geopolitically, it's not very easy to survive this the trade war. Honestly, after having picked up a fight with the big boy on the class, so my sense is that will have ramifications and larger repercussions if it is not sorted quickly enough, Karthik. And I think that's what market is also sensing. Yes, you are right that market has factored in the 50% tariff news, but look, honestly, I think we haven't yet factored in the second level and the third level implications if US and India were to go head on head in terms of this tariff war.
Right.
And if there are larger sanctions on India, which I think even US is forcing EU to contemplate for everyone who's buying or who's importing oil and gas from Russia, then perhaps it might look a little more sober from here on. So my sense is it's a wait and watch scenario. For long-term investors, obviously these are good accumulation zones, but you never know when the rally comes on. It'll all be on a piece of news
Right.
whenever it happens. So one single line will turn the fortunes,
That's right.
and we will all have to wait patiently for that line to come our way. It perhaps might happen next year or might happen sometime this financial year. No one knows. But yes, we'll have to be in the market to enjoy the benefits of that.
That's right. So you mentioned one big boy, one big bully in the class that India has picked up the fight with, but then there are also other big bullies that India is now becoming friends with, and I'm talking about Russia and China here. The fact that the coming together of the BRICS bloc, and in fact what we heard External Affairs Minister as well as the message from Xi Jinping yesterday that BRICS must consolidate and become one united front to deal with Donald Trump. How does news or how does, a messaging like that augur for foreign investors? Do they look at the formation of BRICS and the coming together and the rise of RIC as one potential way to offset the big bully called Donald Trump?
I'm not really sure on that, Karthik. Honestly, I think foreign money will typically follow the US
The
pattern,
US
and that's
pattern.
my reading of the markets. Honestly, I think that's where the larger chunk of money flows from. It's the European, the US, and the Canadian funds or the sovereign funds or their diktats, possibly. That's where the larger foreign money comes from. And I'm pretty happy, honestly, the way India postured yesterday. It was not the Prime Minister Modi who attended the BRICS meeting, it was the External Affairs Minister. So Prime Minister Modi kind of diplomatically kept away from the meeting, signaling to US that yes, we are still open to a kind of a deal or a pact with US, and US will perhaps remain our first recourse. And ideally that should be the case. Leave aside Russia in that equation, because Russia has been a long lasting Indian friend, and that friendship doesn't go anywhere. But I think you and I, honestly, everyone is skeptical of how far an India-China relationship can go. Honestly,
Right.
right? So my sense is, I think diplomatically, it was a great move for Prime Minister not to have attended the meeting. And I would still hope and believe that India and US find a pathway together.
All right. Well, let's hope that that happens sooner than later, at least in the interest of retail investors. But Mohit Gang, always a pleasure having you here with us, and thank you so much for your time.